Hi, I'm Pattu from Brief and Cal, and let's take a look at Nippon India Small Cap Fund this week. As you know, Nippon India Small Cap was earlier called Reliance Small Cap, and this fund was essentially it has been a small cap fund right from inception. It was launched in September 2010, and it had a mandate to begin with to invest in 65%, minimum 65% of small cap companies. Of course, the definition has changed after the SEBI categorization, but it's not too much. After the SEBI categorization, it formally became a small cap fund. Earlier, it was just called an open ended equity fund, and it had considered a lot more freedom earlier, but it was a small cap fund in character, and there was not much of a change. In March 2018, just before it was formally classified as a small cap fund, it had restricted lump sum investments. It said no more lump sum investments into the fund because the AUM had quickly grown to 6,300 plus crores. It is one of the most successful funds of Reliance Mutual Fund, and the fund stopped lump sum investments and allowed only SIP investments with a maximum of 1 lakh a month SIP. From October 2019 onwards, it has now become 5 lakh a month SIP. So you can remove or add up to 5 lakhs a month STP or SIP, but you can't do any lump sums in the fund. But one thing I noticed was while trying to find out all this history, at the Nippon India Mutual Fund page is very good. It's got a nice notices page which is easy to search for funds and so on. So that's a nice job done. So what you see here is the asset allocation history of the fund, and you can see from July 2017, which is almost a year before it was categorized as a small cap fund. You can see that it had a predominant small cap exposure in in its portfolio. So it is pretty much a small cap fund in at all times. Now, what struck me was when I actually I mean, every week it becomes more and more difficult for me to choose new funds because I've covered most of the more popular funds. And one thing I noticed was when I looked at the NAV over the last 3 years, if you notice, from early 2017, this is the Nippon small cap is white, the yellow is BSE small cap, and red is Nifty small cap 250. You can see from between two, that is in 2017, or rather from January 2017 to about January 2018, right up until the budget, the fund moved up nicely in step with the indices and even outperformed it a little bit towards the end of the small cap rally. But then when the small cap started falling down, the fund did not fall as much, and it was able to soften the blow for investors. And it has also quickly recovered in the last few months, in the last 6 months or so, when the small cap and the mid cap indices have reversed their more or less reversed their fall. The fund has also done admirably well. If you look at every possible 5 year returns of not only the fund but also other category peers. For example, red is BSE small cap, green is Axis small cap. It is a recent fund, the history is not as much. The blue is Nippon small cap. White is HDFC small cap. Please keep in mind, HDFC small cap did not operate as a full-fledged small cap fund before it became a small cap in about May 2018. So don't judge it too harshly. Then you have SBI small cap, which is the pink line. So you can see here, every colored line has got 1085 5 year data points, and you can see both the SBI fund and the Nippon small cap fund, they have admirably outperformed BSE small cap quite comfortably, and of course HDFC small cap, after it became a small cap in the last couple of years or so, it has done quite well. Axis small cap has also done reasonably well. This is over 5 years, and over every possible 7 years, which is not much, which is of course only about 598 data points, which is the investment window for a 7 year period is only from July 2019. That is, this is the end of the investment window. So 7 years means June 2010 to June 2013. So investments made between June 2010 to June 2013 are what we are considering. The returns are what we are considering, and you can see over that window, both the SBI fund, which is pink, and the Nippon fund, Nippon small cap, which is blue, they have comfortably outperformed the BSE small cap fund. HDFC small cap has also done well, but of course it was not a small cap for much of this period, so don't worry too much about it. So all in all, Nippon small cap has done quite well. It's a fund that you can consider. Of course, SBI also has done well. There's no, I mean, I don't want to nitpick and say that's better, this better, and so on. I won't. That's a little immature. But Nippon can be considered, provided you don't have a problem with the SIP restriction. That is, you have to invest only via an SIP. But it's a good move by the fund house to keep that restriction on, because it will protect existing investors and it will also protect new money that comes in. The fund manager will not have to struggle too much for finding opportunities in the fund. Perhaps it's a very good move, and I think it may help small cap investors if SEBI mandates that above a certain AUM, small cap funds should only have gradual investments. They don't have to have investments via SIP, but they can say the lump sum can be restricted to 1 lakh or 2 lakh a week or something like that. Maybe something like that. Something of that order can be done, and all small cap investors can be protected. I think that can be considered. Nippon small cap has done quite well. There is, but you have to be careful whether you actually need a small cap in the portfolio. I don't recommend small caps. I just talk about small caps because, hey, I get traffic. So that's what I wanted to talk about.